Hey guys, James here. The crypto market is hotting up once again. Bitcoin prices are being bid up, meaning the entire space benefits. What's happening in relation to the top cryptos in August? Here's a look at the big moves in 5 top coins. And as always, timestamps for each section of the video are in the description box below. This video is sponsored by Bybit. Trade crypto futures on Bybit with trading in Bitcoin, Ethereum, Cardano, and way more market supported. Or buy and hodl your crypto with Bybit's new spot trading market where you can get 0% maker trading fees. Use Bybit's easy fiat on-ramps or transfer in your crypto to trade with those low fees in the spot market. You can find out more about Bybit's low trading fees and sign up offers via the link in the video description below. The first coin to look out for, of course, in August, as in most months, is Bitcoin. Yes, the Bitcoin chart has changed now from that big sell-off that we saw from the China forced selling. Now it looks like we do have a bid up on the price, moving up into the $40,000 range yet again. This is an incredible price for Bitcoin. One of the catalysts that sparked that move was the news that Amazon were apparently definitely lining up Bitcoin payments. Actually, they came out this week and said that they are not going to be accepting Bitcoin payments this year. They were, however, absolutely considering crypto payments in the future. This is such a bullish move overall. The largest retailer online trying to get into some sort of crypto market, maybe a cryptocurrency themselves, or accepting cryptocurrencies for payments. It just shows that the adoption of Bitcoin is not stopping, and we are just at the start of a complete mass adoption into blockchain and cryptocurrency technologies. Whereas we don't know exactly what Amazon are planning right now, they have confirmed that blockchain and cryptocurrencies are in their future. Whilst I also think that accepting Bitcoin as a payments method is also a red herring, because Bitcoin really is a store of value and property rights in the digital ecosystem, not really a daily payments currency. There are just so many things that a company like Amazon could do. They could essentially turn their absolutely gigantic customer base into another revenue stream using cryptocurrencies. Amazon could offer blockchain or crypto-backed loans, decentralized finance. You could even use your Bitcoin as leveraging loans. So maybe you could borrow US dollar tether or even a central bank stable currency. There are so many things that could happen, and Amazon being such a leader in web services, obviously a massively exciting time for cryptocurrencies. There are many stories like this of adoption, but also the huge positive for the Bitcoin price is inflation in the States and worldwide. As we saw this week, Jerome Powell actually said on Wednesday that they acknowledged that inflation has risen much faster this year than he or other senior Fed officials have predicted. This is essentially an admission that inflation is getting out of hand. Why is that important for the Bitcoin price? Well, essentially, there are only a few inflation hedges around right now. We've seen growth stocks being bid up, Facebook, Amazon, Tesla. Why have tech stocks risen? It's because their bottom lines, the rate of growth in their net profit, is the only thing keeping up with inflation right now. If you're invested in a value stock that is growing its bottom line by 1 or 2%, it is essentially losing money because it is not keeping up with 5 or 6, 7, 8% inflation. With higher inflation now admitted to by the Fed comes a search for assets that can protect you against that inflation. And as we know, Bitcoin, being a digitally scarce asset, seems to be one of the best inflation hedges, according to more and more investors. So we have huge adoption, we have inflation fears, but we can look at some on-chain metrics. Thanks to Will Clemente for these. We can see the liquid supply ratio is increasing. What does that mean? Well, it's supply shock growing stronger as liquid coins from April and May continue to get reabsorbed by entities with little history of selling. Essentially, coins being bought and taken off the market, long-term holders reaccumulating Bitcoin, which of course makes it even more scarce if those people buy it and don't sell or trade it. We can see that China forced sell-off when China essentially banned people from buying and trading Bitcoin. We had this sell-off. It seems like all of that forced selling is now out of the market, and we are getting back to what was previously business as normal, Bitcoin moving into diamond hands. Another interesting piece of data right here, as you can see this purple line, this is the supply held by entities with a balance of 0.1 to 1 Bitcoin. These would be known as retail investors, small investors, but you can see there are many smaller investors who are just buying and hodling. In my opinion, what's happened right here is the forced selling in China, of course, made the price fall significantly. If there are forced sellers in the market, then the price will fall and people are happy to buy. But if you know that someone has to sell, you're not going to bid up the price. You want to get some Bitcoin, but you're not going to pay 60,000. You're going to wait and get it at 30, 35, and that's exactly what's happened. And it seems like that supply is actually drying up right now. This could be bullish short term for the Bitcoin price, but Bitcoin is a long-term asset for long-term investors, and all of the fundamentals do look incredibly bullish in general. Next up, we have some great data for Ethereum, another crypto to watch. Why? Well, Ethereum 2.0 seems to be hotting up. As we know, Ethereum right now is a proof of work blockchain, but it is moving over to ETH 2.0, a proof of stake blockchain. And we have a rough date, possibly the end of this year, the beginning of next year, but that is only 6, 7, 8 months away. As we know, ETH 2.0 will give a lot of upgrades to the blockchain. However, ETH 2.0 gives something else that long-term institutional investors like, and that is staking rewards. Staking rewards on ETH will give institutional investors a yield, 5% let's say, and that is something that investment banks and pension funds can sell to their clients for sure. Don't take my word for it though, we have fundamental data right here on ETH 2.0 staking. So you can see the staking rate percentage for ETH 2.0 is dramatically increasing over time, and this means that those coins are being locked up in those staking contracts. There are ways to stake your ETH and get different types of investments. For example, on Binance, you can get BETH, and that means you can lock up your ETH, but have a different type of cryptocurrency that can trade the value of ETH. It gets a little bit complex, but in general, just know that more ETH is being locked up and staked in the ETH 2.0 contract. And this could essentially mean that over time we get a supply shock for ETH. As we know, on August 4th, the London hard fork will come about, and that will also put a supply shock on ETH as well. With the London hard fork, essentially when new blocks are mined, ETH could actually be taken out of circulation, meaning that instead of an inflationary supply, the actual amount of ETH in circulation could stay around the same. This should long-term be positive for the price, because if new Ethereum coins aren't minted, then you have essentially a capped supply. So the value of ETH won't be inflated away at 1.5%, 2 or 3% a year. So long-term, again, increased adoption and potentially limited supply seems to be a good thing overall for the value of ETH. Moving on from ETH though, and sticking on Ethereum DeFi, Uniswap has been in the news for some good and bad reasons this week. So let's start with the good news. Firstly, there was a leaked video at an Ethereum conference that it looks like fintechs are circling around decentralized finance. Of course, fintechs like PayPal burst onto the scene many years ago now and have found it increasingly difficult to grow their market share in what was an increasingly stagnant market. It seems like decentralized finance, so we have Uniswap and Aave on Ethereum, are breathing new life into the industry, and it looks like PayPal, E-Trade, and even Robinhood do want to take advantage of this. The video has since been deleted, but we can see what was said. Uniswap's growth lead, Ashley Schapp, hinted that the company has possible deals in the works with major trading and payments platforms, including PayPal, E-Trade, and Robinhood. No official or formal partnerships, however, exist as of today, but you would definitely expect Uniswap to be talking with PayPal and Robinhood, companies that have huge audiences and a huge user base. Something that you may question though is how a decentralized protocol that is out of anyone's stewardship manages to talk to PayPal and Robinhood. Well, this is part of the controversy of what's known as decentralized finance right now. This week, Uniswap delisted 100 tokens from its interface, including options and indexes. So how can a decentralized protocol with no central authority authoritarily just delist 100 tokens? How does that happen? Doesn't Uniswap have the Uni token, which is a community token that lets users vote on every decision that's made? Well, it turns out no. The way that decentralized finance really works is that you have usually a team of developers that is venture backed. That means there is one or more venture capital funds that put up the money that pay the wages of these developers. Venture capital funds don't usually care about decentralization and democratization of technologies. In fact, quite the opposite. They want complete ownership and control of these technologies so they can make the most amount of money selling them and getting us to use them. We can see here that the changes that Uniswap made pertain to the interface at app.uniswap.org. The protocol remains entirely autonomous, immutable, and permissionless. So which one is it? Do we have a completely autonomous protocol, or can they just flick a button and change how the protocol works? Like I said, with DeFi, the back end will usually be controlled, but the front end interface, yes, that code is open source and can be anonymous. This is really an oxymoron. It doesn't really work out, but that is just what DeFi is. You do need people and you need money to build these decentralized platforms. And on the back end, there is always going to be someone controlling some portion of it. The decision that we have to make as investors is if we care about this and if we think that long term there is still value to be had in this type of setup. Something really important to note if you're investing in DeFi versus something like Bitcoin is that the regulation around them is going to be completely different. Bitcoin as a crypto asset will be taxed and treated like an asset. A DeFi token is going to be treated more like an investment. So you're essentially investing in a company, and if that company provides services such as insurance or lending, we have to know that that will be regulated in a completely different way. Governments around the world simply cannot let a completely wild west financial situation occur, and so decentralized finance is going to have a lot of regulation coming to it. Again, like I said, as investors, we have to work out whether there's still value to be had in decentralized finance. And coming to something like June Analytics, which gives us plenty of usage stats for DeFi, I think the direction of travel is quite clear. There is a huge adoption in DeFi, as you can see, and I don't really see it stopping. We are just at the start. Pretty much every usage statistic shows huge adoption for Uniswap, for Compound, for SushiSwap, and for 1inch. All Ethereum DeFi. There will be some winners and there will definitely be some losers, and so investing in DeFi and in DeFi tokens is far more risky than a property asset like Bitcoin, but there will also be big rewards for some of these platforms and for some investors. Next up, a coin that I like more the more I research it, Solana. Solana actually did something really big this week, and it introduced stake pools. This is huge. If you follow Solana, you'll know that Solana is built to be an extremely fast blockchain. The blocks in Solana are incredibly fast, meaning that there are just many advantages to this. You can have decentralized exchanges that trade very fast, and you can essentially clear on the layer 1 blockchain. Something that most blockchains can't do right now is have very fast block times and also a high degree of decentralization. Solana's taking a big step to both of those. As you can see, stake pools now let other people and other users create their own stake pool, and this means that decentralization can actually grow. Solana did write a post about this on their Twitter. So a network's censorship resistance is a measure of its ability to withstand disruptions or attacks. Let's say, for example, you only have 20 nodes running a blockchain. There is a potential for those nodes to be overtaken, but if you have hundreds or thousands of nodes around the world, then censorship resistance increases, decentralization increases, and for a blockchain, that is definitely a big value add. We can see now that greater stake distribution increases the super minority, making the network harder to attack. Yes, it is more censorship resistant as well. And Solana have now introduced stake pools, which is a solution that promotes decentralization and the growth of decentralized finance. There will be more nodes, and so SOL stake will actually be spread across more validators. This is absolutely fantastic news for a blockchain that has really fast block times. And we've already seen products like exchanges want to use Solana. Now it is becoming more decentralized as well. And Solana is not a big name, and it doesn't get the hype that Ethereum and Cardano get, but they are just building slowly and consistently, and bringing a huge amount of development and products to the blockchain. And now with a higher level of decentralization, this is a big plus for Solana. Something else that they've worked on is something called no code platform. Yes, you can actually introduce or mint a token on Solana and you don't need any coding knowledge. This is absolutely amazing, and it means that people without much knowledge can actually go on and start creating their own token. And this could really encourage many different types of investment, many different types of products, and really open the world to many different types of possibilities. There is a decentralized exchange called DexLab. It's on Solana, and they will let you mint a token and put it on their decentralized exchange in just a few clicks. A major concern I have about this is, yes, once more, regulation. Some things do need to be regulated, and if we just have anyone creating a token, of course, that means that there is going to be people who use it for the wrong reasons. And as we know, there are many scams in DeFi, so that's something to watch out for. And of course, next up we have Cardano ADA, which is in a phase right now, literally the calm before the storm. We are waiting for Alonzo, of course, the launch of mainnet smart contracts. Solana have them already, Ethereum has them already. Cardano is just slowly biding its time, making sure the code is perfect, getting all the kinks out. And as we know, Cardano will be telling us more in September, but actually every month they do a Cardano 360 event where they give us even more information about what's happening on the blockchain. You can actually go to summit.cardano.org and register. There will be a Cardano summit and you can register your interest. You can get all the information about the summit. It will be online and it will tell you everything there is to know about the launch of Alonzo. Something also very interesting about Cardano, as we know, they're not just building a blockchain, but they really have a focus on Africa and actually building infrastructure for people in Africa that are unbanked. Along those lines then, there was news recently about something called World Mobile Chain, which is actually launched on Cardano. World Mobile Chain is a token, but the company behind it want to give cell nodes, so this is cellular network nodes, to small business owners across Africa. They want to do this at a very low cost, so they want to bring cellular networks to people that don't have them. What's amazing is that the front end, so the way that people pay and register, will be done on the Cardano blockchain.
It's a demand-driven business, so we're going where the demand is the highest first. Sub-Saharan Africa, the demand is massive, with 1 billion people there, over 1 billion people, 800 million without any internet at all. We're starting in Tanzania, and specifically in Zanzibar. That's where you'll be able to see us, and we're rolling out right now as we speak.
Digital money doesn't exactly work unless you have networking. So there's a question of how do you get billions of people who aren't online, and the billions of people who are online but not reliably online. How do you fix all of that and get people to bridge that gap, that last mile? And how do we do it in a far more democratic way? So this is a pretty exciting relationship for us, and it's a place where it really pushes the boundaries of protocol design, because there's a lot of really careful problems you have to work your way through.
World Mobile Token has actually launched already on Cardano, so there will be a smart contract when mainnet smart contracts are available, but World Mobile Token is already launched on the Cardano blockchain. And you cannot have a digital infrastructure without cellular networks. So this is a huge and fundamental opportunity that actually needs to go well for Cardano. But that is 5 crypto coins to watch out for in August. There's just so much happening in the blockchain space. If you want to trade any of the cryptos that I talked about in this video, you can check out Bybit's new spot market, where you can buy and hodl your cryptos with 0% maker trading fees and just 0.01% taker trading fees. You can find out more about Bybit's trading fees and also any potential sign-up offers. Just click the link in the description to go through to Bybit. Thank you so much for watching this video. Do subscribe for daily helpful crypto content, and I'll see you in the next one.